Welcome back to The Price of Business. I'm your host, Kevin Price, talking to you about you and your business. Brian Gordon, he's now a regular on The Price of Business. He's a contributor on the program. His company is MAGA LTC. That's for long-term care. That's MAGALTC.com. How are you, my friend?
I am doing well, Kevin. How are you about yourself?
Good, very good. Real quickly, tell us what your company's all about and what you're doing for mankind.
For the past 41 years, our organization has specialized in long-term care planning, helping people figure out how to pay for extended care as we're living longer, covering the home care expenses, assisted living expenses, and nursing home expenses for people. And what it does is it just allows their families to make better decisions as maybe mom or dad or an aunt or uncle or a grandparent becomes sick. Families don't put such a hard stress on the financial cost to them, and they're making good decisions if they have some insurance to help cover that. Or even if they don't have insurance, we recommend that a family, I believe we've talked about before, I recommend families always have a plan in place that if they're not going to have an insurance program to push some of that risk off to, that the family should know what assets they should tap into first to help pay for that type of event if it should occur.
Yeah, that's a good overview of what's going on. What percentage of people have long-term care? Do you know?
We hear numbers anywhere from about 8 to 10%. The most recent one that I read was 10% of the people that out of the population should have it. Only 10% of those people actually carry the policies for themselves, which is a little bit higher than what I'd heard in the past. So that's a positive.
Yeah, absolutely. So it's growing. How long has long-term insurance been around? I'm assuming a very long time, but it really didn't get any traction until the 90s and 2000s.
Yes, really one of the first generations of plans was available back roughly in 1975, and those policies were somewhat antiquated. They only covered the skilled type of nursing facility. They required people to be hospitalized for 3 days before going into the facility. And it was definitely a little bit tougher to qualify in those older plans. However, in the years I've been doing this, I've seen many of our clients that had those older generations of plans still get the benefits paid to them.
Mm-hmm, mm-hmm. And now it's evolved with lots of different options, lots of different choices. Talk about that.
Yeah, nowadays we work with what's called comprehensive long-term care plans. And by comprehensive, I mean it takes care of home care expenses, assisted living, and the full-blown nursing facility. We don't want to give a family a reason to put somebody in a facility type of setting. We would much rather have them be cared for at home, just like the family and our clients prefer to be cared for at home. The plans are portable also. We know that people today are buying these policies at much younger ages. My average age of my client last year was roughly about 56, 57 years old. So we're seeing people planning for this a lot earlier in life than they ever did before.
Yeah, absolutely. So tell us what you have for us as far as information today. Was there something in particular you wanted to focus on? What we're still finding from a lot of people that we talk to out there, and we're working with corporations, we're working with with a lot of financial planners from coast to coast, and what we're still seeing is that people think that their Medicare and their major medical insurance still covers this problem for them. And for all those who experienced a family member or loved one who needed care for themselves or lived a long life and needed services, we realize that is not the case. Our Medicare and our major medical, they do a nice job for things that you and I are going to recover from. That's what their job and their goal is to do for us. But issues that become chronic in nature, anyone who has dementia or just a problem that's not going to get better, our health insurance and our Medicare supplements do not address those problems. Mm-hmm. So people need to understand that. And people need to understand that the implications are far-reaching if they are not prepared with long-term care, and their options become limited. What they have to do with their personal finances are rather draconian. Talk a little bit about that.
Well, the finances become a real concern, especially if you're dealing with a couple, that one of them happens to need care. That we see putting a tremendous financial strain on the families. We see a lot of children stepping up and having to help mom and dad out to pay for some of this care or pay their taxes. pay some of their bills to kind of keep their lives going in the right direction, and to try to alleviate that financial concern that mom and dad have. So we're seeing a lot of families, kind of step up and help them out.
Yeah, absolutely. So, you mentioned that it's roughly 10% now are doing it, getting long-term care. Talk about how that compared to, say, just a decade ago.
Probably a decade ago, the numbers we were seeing was probably 6 to 7% of the population maybe had this policy for themselves. And you got to remember too that these plans are not what they used to be as far as from a cost standpoint. So when people are looking at these policies, they really got to make sure that these fit into their budgets. You got to make sure that they're not stretching it, because remember, folks have other options as well. If they don't need, if they're in a nursing facility and they run out of their assets, they run out of money, they still have access to a Medicaid system where they can be taken care of by the state and the government for those services. So you want to really watch to make sure that that person that's looking at the coverage, that it's not affecting their day-to-day lifestyle. We don't want people that are not going to see a movie, not going out to dinner, not enjoying themselves, just so they can fund and pay for a long-term care policy.
Right. Some people are going to automatically, find themselves qualifying for the, Social Security type coverage. Problem is, though, is that for those who had planned better, they would just simply have a lot more options if they had planned better. Isn't that true?
Right.
Quality of life options.
Yes. No, it's easier for these folks to make decisions. And again, people today that are buying these plans are not buying 100% coverage. They're buying something that gives them a really good hedge to cover that cost for them. And so that's what people got to remember, is that they can, even those folks that can self-insure, they're still looking to buy insurance to kind of push off some of that risk elsewhere for them.
Mm-hmm, mm-hmm. So talk about how those options look today. And by the way, one of the most important factors is that the younger you are, the more affordable it is, correct?
That is correct. And what we're doing a lot more of today is that we've got two different types of long-term care plans. You have traditional long-term care, which is the type that you pick your length of coverage, how long you want the benefits to run, how much per month to work with, what type of inflation, if any, protection, if any, they want to put on the policy. Those are your traditional plans. Those have been around for 40 plus years. We also are doing a lot more today. I refer to them as asset-based policies, but a lot of people refer to them as hybrid plans. And those are life insurance with long-term care riders on them. And they're neat policies out there today, because most of the people that I'm working with, and unfortunately my friends are in that age bracket now of about 45 to 55 years old where they're looking at this coverage. But what they're liking is the idea that these premiums that we're looking at with the hybrid plans are guaranteed for them and their families. They can design it a number of different ways. They can do a single premium and have the policy fully paid up. They can do a 10-pay. And we even have one carrier that will let them just do a perpetual pay where that premium stays the same every year, so it's easy to budget for something like that. And that's something that we see is a big growth area in our business right now, and a lot of more people are really looking at those types of policies for themselves. And they like the idea of, the life insurance side of it. If they don't use it, they basically get their money back that they paid into the plan, or with a little bit of bump in the money that they put in. But the idea behind those plans is not the life insurance. The idea behind those plans is really getting some solid long-term care coverage.
Yeah, what's interesting about that is essentially you get to hedge your bets a little bit, don't you?
Right. And I just find with what we've dealt with, some of these rate increases, and over the years we've had some substantial increases, which I believe, in my opinion, were well warranted on a lot of those policies out there, so I don't have a problem with it. But working with much younger people today, their concern is that they don't want to see these premiums getting out of control in their retirement, because they're concerned that their income in retirement obviously is not going to hold up on that.
Yeah, no question about that. All right, we've got to wrap it up with that. Final thoughts before we let you go.
I talk to clients, I talk to advisors. I always say to them that if people care about their families, care about where they're taken care of, put a long-term care plan in place of some sort.
Yeah, makes a lot of sense to me. Best website to let the listener know how to reach you.
www.magaltc.com. That's www.magaltc.com.
Brian Gordon, thanks so much for being with us. When we come back, much more for you. Do want to remind you, best content here will be found over there at usdatareview.com. While there, like it on Facebook, follow it on Twitter.